Hello everyone, welcome back to my channel. I'm your host Miss KK and this is the way. So today we are discussing something relatively important that I completely forgot to do at the beginning of this tax education series, and that is the type of tax system that Namibia uses. I completely forgot to talk about this until someone recently mentioned that they have shares in Easy Equity, and that's when it hit me that those guys that have investment in Easy Equities are actually investing in foreign markets, and because different countries uses different type of tax system, you could potentially be exposed to different tax treatment pertaining to your income. So today I just want to describe a little bit of what the tax system that we're using in Namibia means, and also contrast it, for example, with South Africa, and what would happen when those two things are conflicting. So in Namibia, we use what is called a source-based system. That means we in Namibia only tax the income to the extent that it's from a Namibian source. And a Namibian source just means that services or goods was rendered within Namibian borders. The term source is actually not defined in the Income Tax Act. It's actually taken from the reference of case law. And how case law really just fit in tax just means that there was a particular taxpayer who had a particular tax treatment. Then they were not happy with how the government interpreted the law. They took the government to court. A ruling was given, and that ruling set precedent going forward. So that means any person that comes with a similar facts and patterns, that is how we are going to be interpreting what source means. And so that means in Namibia, if a foreigner comes to Namibia, they work on a temporary basis in Namibia and they meet the tax threshold of paying tax in Namibia, they would be required to pay tax because they are rendering that services within Namibia. Contrast that with a Namibian that goes abroad and works in, for example, South Africa or England, because they are not rendering that services in Namibia. Namibia is not going to be taxing them on the income they earn in a foreign country because that's a foreign source. So in Namibia, that's what we do. We use a source-based system within the boundaries of Namibia. And the Act also has something that's called deemed. Deemed is to say that it really didn't happen within the Namibian source, but the Act is making it seem as if it's actually within the Namibian source. So deemed is a little bit complicated, and I'm not going to go into the nitty-gritties of deemed, but you can Google and see what exactly is classified as a deemed source in terms of the Tax Act. So I just want to contrast that with South Africa, for example. South Africa uses a resident-based system. They are saying to themselves, we don't care where that income comes from. For as long as you are a resident of South Africa as defined in the Act, you are going to pay us tax on your worldwide income. So whether you earn it in South Africa, in Namibia, in UK, you need to pay tax on that income. The problem with that, though, it creates a conflict. So you might have a situation where Namibia is saying, let's say you are a South African that has worked in Namibia for 6 months. So Namibia is saying, because you are rendering that services in Namibia, you need to pay us tax on that income because you rendered services in Namibia. So Namibia takes its tax. Then South Africa comes and say, hang on, even if you rendered that services in Namibia, you are actually a South African resident. We want to tax your worldwide income, including the income that you earn when you were working in Namibia. So now those two systems are conflicting. Namibia has taxed you, South Africa has taxed you. What then happens? So normally when there is, those double taxed story, countries have also preempted that, and they've entered into what is called a double tax agreement, where they give relief to our residents where when they find themselves into those conflicting situations, who has preference in that instance. And if there is a double tax agreement between the two countries, a taxpayer is never disadvantaged because then the countries would take the principles of the double tax agreement, and whoever has the preferential rights to tax that income would actually take it. For example, maybe South Africa might say, if a Namibian resident is working in South Africa and Namibia, so Namibia might have the taxing right, or it might be vice versa. But if there's no double tax agreement, unfortunately, you as a taxpayer would have to bear the burden of being double taxed. So really, that's all I wanted to discuss in this video. So now you need to think to yourself, if you are making money from Easy Equity and you are making it in South Africa, you shouldn't be declaring that income in your Namibian tax return, because technically Namibia doesn't care about your foreign income because they are using a source-based system. But potentially you should be assessing whether do you qualify as a resident of South Africa, and should you be filing a return in South Africa to declare that income, because also a resident doesn't mean that you are born in South Africa. There are also different rules that are used to define the term resident, and it's also relative in terms of their tax law. So I just thought it was something interesting that I should bring it up. And obviously, if you are just starting on your investment journey, you need to take into consideration that different countries are using different tax rules, And when you are investing, you must look at which countries are actually favorable in terms of tax rules, so that when this double tax stories come into effect and then preference is taken, you are actually making the most out of your money, and that's where tax planning comes in. So really, that's all I had from today's discussion. Thank you so much for following our tax education. I hope you've got time to actually file your return, and if you haven't done so, please do request an extension, or please go to the number of officials to explain your situation or ask assistance if you are struggling, to make sure that you're actually becoming a tax compliant citizen. Until next time, it is goodbye.